I work at Horizons, which is based in Cedar Rapids, though we do have people who come down to Iowa City on a regular basis and have appointments here. We work in credit counseling, and so we help people who are, some people might be on the brink of financial crisis, some people might be thinking they're nearing it, some people might need help with housing or student loan assistance and so on. But we try to help people and find a way or find a solution to have better personal budgeting, and as well as budgeting that helps them in a small business. We see more and more people starting some type of small business on the side or doing something. Thank you so much. And we think it's really important that you have your personal financial house in order before you're trying to then create that business or get that business going. Plus, we know sometimes you might need access to credit. And so I also wear another hat in a volunteer mode. I'm actually a counselor for SCORE, which does small business counseling and mentoring. And so that's another reason why I have a passion for what you folks are all doing in here and what you're about and trying to help you out in any way. So with that, I want to start with that quiz. And so on that first question, you had, if I get married, my spouse's credit score or credit will influence my credit. Any guesses? Any thoughts? Yes? No? Maybe? Go ahead.
Yes.
Yes?
Once you're married, it's like you come into one. Everything's put together.
Let's sign a prenup.
Well, there you go. There you go. Well, in a sense, you're right, holistically. But if you have your own credit score and your own credit history, your spouse has their own score and history, until the two of you start buying things together and putting your name on that same credit card, or both your names on that loan or whatever, your credit scores are still separate. So if you never have a joint account and never sign a loan document together, you could go the whole time without being affected, at least by their credit score. That still in the end might affect how well things go if one's really bad and one's great, but that's the answer to that one. Let's see, let's look at the second one, which is my income doesn't affect my score. Yes or no? What do you guys think? True, right. So no matter how much money you make, they're not going to be reporting that on your credit score. They may report who your employers are. Your employers, sometimes they your information goes to the credit bureau, and sometimes it doesn't. So, your credit is really affected by a lot more factors and other factors than your actual income. So that was the first real question. Let me look at that next one, then we'll just go to let's see here. If I have a low credit score today, I'll have a low credit score tomorrow. What do you guys think? False? False? Everyone agree? Right, because you can take steps to improve it over time. And so that's what we're here to talk about, because we want to make sure that your credit questions are answered in this session today so that you can be ready to do whatever you want to do with your business. So financial health. At some point in time in your life, especially with your business, you're going to need access to funds, either to start your business or to grow your business. And what we find statistically is that most entrepreneurs bootstrap their business. 73% of them use their own funds, maybe family funds, whatever, to get things going. But sooner or later, almost half of the entrepreneurs out there go out and they try to get some type of financing, and they go to a bank. And so that's why credit is so important. Now let's do it. Yay. All right. Now I got the buttons. All right. So let's talk about credit. Credit is the whole concept of receiving something today that you're going to pay for tomorrow or next month or however it works. So there's a number of different types of credit. We've got credit cards, we have mortgages, installment loans, car loans, payday loans, and even line of credit, and of course commercial loans that you guys might be interested in today. There's a few credit terms that you guys should all be familiar with. These are pretty basic. Installment is like your student loan. Revolving is your credit card. Your secured loans, like something for your house, would be your mortgage. And an unsecured loan would be a personal loan. And so sometimes a personal loan is sometimes what people do to finance their business. Also, sometimes people will do like a home equity loan potentially to use some of that money, though I know the rules are changing on using home equity loans to finance businesses moving forward. There's the 3 C's of credit. Those make sense. Character, like have you been paying your bills in the past? Have you been doing a good job? Capital, do you have the assets to pay for your business and pay this loan over time? So that's a big one for banks when you're starting to potentially try to access some type of loan for your business. And then collateral. What if it doesn't work out? What if your business goes into the dumper? Well, do you have money, or do you have, not money, but rather assets like a house, a car, the inventory, the furniture, the whatever from the business that you bought or started, can that help cover the loan? So character, capital, and collateral are very important on a business level as well as a personal level. Now when we look at that interest rates, which one looks like it's the best? This is the easy one, guys. The best deal out there. Same loan amount, $500. Which interest rate is the best? Probably loan number 3, which is that 4%, because you want to be paying the least amount of interest, right? It's important, though, to think about really what that annual percentage rate is, and that's what that next slide shows you, that even though you had a 4% rate there, you also have fees with that particular loan, and when you start looking at the annual cost of that loan, that's about $145, and you calculate your percentages into that. And so really loan number 3 is probably one of the worst. So you know when you're buying a house or doing other things personally that you really have to look at that APR, and the same thing is true if you decide to move forward with getting a loan for a business. So really read the terms of your contracts, understand exactly what's happening. Go ahead.
APR?
Annual percentage rate. Yep. So the interest is the cost of borrowing the money. The annual percentage rate is your annual cost of the loan, which includes your interest rate plus your fees. And so that's why, even though loan number 3 was at 4% interest, because of the fees associated with that loan, it's really not as good. So here's a good one for you. Minimum payments on credit cards. Again, 18% interest, let's say, $6,000 credit card debt. If you paid the minimum payment on that card, which on the first column here is $150, it's going to take you 62 months, which is 5 years, 2 months, and the total amount of interest you would have paid would have been $3,231. That's by making those minimum payments. So even if that's a very long time to almost the double the amount of money if you're actually trying to get a loan for $6,000, or not loan, but have credit card debt of $6,000. Even if you just increase the minimum payment up to $200 a month, you can at least shorten it and take it down to $2,000 worth of interest paid. So again, paying minimum payments on your credit cards, while it might help you keep your bank account afloat from month to month, it's really, can cost you a lot of money and that you could be spending elsewhere. I'm going to just touch briefly on credit rules that are out there. As I said before, choosing a credit card or looking at a loan, it's pretty important that you look at those interest rates. Are they fixed or variable? What is that APR like we talk about? What are the late fees, over the limit fees, credit limit? Just be sure and really read the contract on anything with regard to credit cards or loans. Credit rules that we have in place today that haven't always been in place, for someone maybe a little older in the room, at least I am, and is that you have to be notified anytime the rate increases on your credit card. It used to be that they could just increase it from month to month, and you're like, what happened? I was at 10%, now I'm at 20%. Why is that? Now maybe it's because I didn't pay my bill, but at least they have to tell you ahead of time why they're changing it. They also have to let you know how long it's going to take you to pay off your balance. They have to let you know about the penalties, and they need to be reasonable and that sort of thing. Other credit rules that are important, especially today with identity theft, are things like what's going to happen if your credit card is lost or stolen. If you recognize it's lost or stolen and you contact that credit card company within 2 days, the most that you can be liable for is $50. So as soon as you know, call, get a freeze on that card, let them know. If you go more than 2 days, but less than 2 months, basically, the most that you can be responsible for is $500. You know, if you don't notice it and you haven't been monitoring your credit card statements and your credit card balances, and you go more than 60 days, well, you know, however someone's using it, they're using it, and so you can't get those wiped away. But so the bottom line is, if you lose a card or it's stolen, notify that credit card company as soon as possible. All right, let's look at credit reporting, and because I know that's really the most important reason for why you're here. And as we said, on those on your credit reports, you're going to have a fair amount of information. No, we're not going to have income, but we are going to have things like your personal information, like where do you live, where are all the different places you've lived over time, who are all your credit accounts with, what are those balances, do you have any derogatory accounts that were, they either open or closed, how many people have been inquiring about your credit in the last, several years, I think it's like 5 years or so, you can see that, as well as public records. Did you ever declare bankruptcy? Is there a judgment because of, let's say, repossession, like a car repo or something like that? Those are the types of things that are on your credit report. Your credit rating, though, impacts many things, right? So it can affect whether or not you can get a house, or maybe you can get a house and a loan, but maybe that, the interest rate's going to be really high. It can affect transportation, maybe getting a job, depending on what kind of job you have or looking for. It can really affect your ability to obtain loans for your business, and I know that's part of the reason why you're here. It can also, for me, I see a lot of people who are under financial distress, and it can really affect their health. They don't know what to do. I have a lot of people coming in either with like anxiety or depression, different issues. Now maybe those issues are what caused the finance thing, or financial issue, or maybe it's the other way around. But I mean, people in the situations where they have difficult financial situations, it really does affect their health. It also affects your flexibility to make the choices you want to make in life. Where do you want to live? Where do you want to work? Can you start a business? What do you want to do? So financial health is very important. So we encourage you to review your credit report at least once per year and up to 3 times per year. And I know now that a lot of people do Credit Karma, and so that's really handy because you can see a lot about what's going on. And we actually had a gentleman come into Horizons a few months ago, and he's like, I was watching my Credit Karma, everything's been great. And all of a sudden I went down 100 points. He's like, and it looks like there's an issue with this auto loan I had. And so we started looking into it, and what had happened was he had, unfortunately, he'd been in an accident, totaled the car. It was a car he was still making payments on, but because of the accident, he wasn't responsible. Everything was supposed to get paid off on that loan. In the meantime, he went and bought a new car, didn't have any problem buying a new car, but what happened was he bought a new car, and about 30 days later, all of a sudden, as I said, his credit score went down. And it was because the company that was supposed to be paying off his loan amount did not send that payment to the right place. So now all of a sudden it looked like he was delinquent on his auto loan that really, to him, in his mind, was completely closed. So after looking at it a little bit closer, we encouraged him to contact the company that was supposed to take care of paying off his loan, and send them a letter, ask them to take care of it, and then also for them to acknowledge that they had missed it in writing, and then that information got sent then to the credit bureau and all the different reporting agencies, as well as who he had the loan with. And so within about 2 months, that credit score started coming back up, and it all got resolved. But the key there is look at your statements, see what's going on, see what's right, and if it doesn't look right, start disputing it or trying to dive into it. All you need to do is, call that company that's showing that derogatory information and say, why is that there? Verify that it's accurate, send letters. There's all sorts of ways to dispute and question credit scores. So, and some of that information we can share with you. I do have a few handouts here afterwards. So how to create a great credit score? Well, if you have none, especially for young people, we encourage them to get a secured credit card, which is, it sounds like that's a little bit of what you're doing. Maybe to get a card, but maybe have a co-signer, like maybe a parent, or be able to be an authorized user on someone else's card, again, another family member. It just helps you establish a little credit if you have none, because you might have been in school or just not had the opportunity to establish anything yet.
And maybe
So let's talk about your credit score. So payment history, right? Do you pay on time? Even if it's just the minimum payment, are you paying on time? That's the most important factor for your credit score. The next important factor is that amounts owed, 30%. So 1/3 of your score. So when they're talking about amounts owed, it really relates to your credit limit. Let's say on all your cards combined, you had 5 cards, and across those 5 cards, you had $10,000 worth of credit available to you, okay? What the credit reporting agencies are looking for is for you to be utilizing only about 1/3 of that credit at any point in time, so around $3,000, okay? They don't want to see you maxed out on all your cards and be at $9,999, because that really shows that you're almost overusing your credit, even though you truly aren't over the limit. And they want to see that you're using potentially credit as a vehicle to get things done, but that you aren't using too much. The other thing is that, like you might have a situation, and I think it'll come up, I don't know if it's on another slide or whatever, but you may have a situation where you do need to use $7,000 of your available credit. But if you're turning around and the next month you're paying that off, then you only had 1 month where you're at, let's say, $7,000 worth of used credit. So some people, I have one person who does a lot of work buying inventory with his credit card, one of the entrepreneurs I know, and so he tends to get maxed out, but he's then turning around, he has the money and he's paying off that that credit every month based on his sales that are coming in. So it's not perfect, but at least he's not letting that just sit at $9,000 or whatever and paying the minimum payments every month, And so amounts owed, second most important. The other issues are like length of history. Better to have a card that you've had around a long time and just kind of use it as you need it. Some people who come in, have 15 or 20 cards, and kind of encourage them to kind of narrow that down a little bit. There isn't an optimum number of cards to have, but use them wisely and be careful. Other times, things that affect your credit score are like your new credit. And what that means is, in the last several months, how many credit cards have you applied for? How many places you're going and trying to get credit and trying to get help, or get more money, And if you have a lot of credit card applications within a very short period of time, that doesn't look great either. But let's say you're a really busy person, so like about every other month you're going and shopping a new car deal or shopping a car and trying and applying, for a potential loan and so on, then that's not great, because it just shows a lot of inquiries. But yeah, anything that you do yourself in terms of pulling your credit report, or like someone like a certified counselor from Horizons, if we pull your report, it doesn't hurt your score. But if you have a lot of inquiries over a given year and so on, like one person, I don't know what's going on, I don't remember the specifics, but it was like half a page, very tiny printing of, inquiries that she'd had in 1 year, cars, looking for apartments, looking for this, that, credit cards, checking out online loans. It was a lot. So I encouraged her to kind of step back a little, yeah, figure out what she really wanted, then apply. Any questions on how your score is created? Go ahead.
Yeah, in that regard, is there any advantage to paying it in full if it's seriously delinquent? I mean, I'm trying to figure out, there was a card that I took out for like a department store or something, and I
Sure.
forgot to set it on auto pay. It wasn't
Yeah.
a huge amount.
Yeah.
It goes from owing $100 to owing $400.
Right. It happens.
So,
Yeah.
it happens.
Right.
But this is, you know,
Right.
my credit score took a hit, so I'm trying to figure out, should I just pay the $400 even though $300 is just fees, or should I settle for $100? What's going to
If you if you can get that company to agree that that not only will they accept, let's say, $200 or something, but that they will reflect that $200 is all you ever owed, and that they're going to show on your report that it's paid in full. Great. But if they won't let the report reflect that that balance is paid in full, then it's not going to look great. I mean, the older the information is, I mean, the less it affects you. But if you have the $400 and just want to get it over with, sometimes it's better to just
But then
do it.
it'll say paid in full, but it'll still sit on my credit report for.
Yeah, it will. It will.
There's no way.
Yeah, I mean, credit cards are going to stay out there. Even when you close it and you have a zero balance, that credit card is going to be on your report for 7 years just because it was a type of credit. And sometimes having that it's okay because it shows, well, you had it and you're in good standing with that company. I mean, in theory, you're.
There's no real reason to put a lot of effort into. I mean, there's no way to get it taken off, even if I
No.
pay it in full.
No, they'll sit out there anyway, even no matter what. Just like anyone who's ever had like student loans, and then you can see that they get transferred from one company to another, and all around those student loans sit out there for a lot until for 7 years as well.
And my last question is there a long-term impact on? Because I'm just like really sour about these fees.
Mm-hmm. Right.
But if the rest of my credit, if I'm good on everything else and I pay off my balances in full, then if I settle for $200, is that going to hurt me in the long run?
The amount it'll hurt you will get less and less over time. So I mean, it all diminishes, and then it's not as big of a deal. It's a big, it's a bigger deal right now. The older it gets, the less of a big deal. And the fact that it's that type of number, if you were saying like, $40,000 or $4,000 or something like that, then I'd be a little more concerned about, that amount relative to everything else that's going
And then
on.
should I close that card?
I don't think it hurts. I really think it's better to just have a couple things that you use on a regular basis, and then it's just over with. And granted, yes, if you close a whole bunch of cards at a time, your credit score will go down some, but then it'll just turn right around. You just do a really good job with what you do have, and keep building it back up. And so does that help? Yep. There is a slide in there about what are the score ranges and so on. So anywhere, I know that you guys can review that. And so let's move on to the next one. Oh, yep, sure, no problem.
If you want to open a business, what score probably will most banks accept your line of credit?
Yeah, you're going to want to be, closer to that, at least a 700 and higher. Yep. So doesn't mean you can't apply for microloans or grants and that sort of thing, but
So you want to be yellow or above?
yellow or above. There you go. And I'm sorry, your handout are black and white, but yeah. But at least you can kind of circle that number. Good question. How to maintain a good credit rating? Well, we've already kind of talked about that. Keep your payments on time, limit the amount of use, keep the balances low. Try to see if you can keep a couple of those older ones open that shows length of credit history. And then, like we said, don't keep opening new credit card accounts. Let's talk about rebuilding poor credit. A couple of you have had some different examples in here, but let's re-emphasize these. So if you know you're going to be in trouble or something's not quite going the way you'd hoped with a given credit card, call that collector. Try to resolve that delinquency. If you know you're not going to be able to make a payment, give them a call, try to set something up, especially if you've had a hardship. I've had different situations where I've helped type up a letter saying so-and-so is working with me in credit counseling. She can further explain the hardship that she had, but she would really appreciate having some leeway with either her payments, maybe skip a month or reduced interest rates or something. But the more you're aggressive in contacting your creditors or any type of collection agency, the better off you're going to be. You can't just put your head in the sand and hope it's going to go away, because it just won't. Obviously, start working on building positive credit, and To reduce balances, there's a couple ways people talk about. There's the snowball method, and there's actually a tool out at powerpay.org where you can enter your existing debts. You don't have to, you can come up, put a fake name in there for yourself, and you don't have to say what company those debts are with or anything like that, but you put your debt, your balances, $600 here, $2,000 there. You put in your current interest rates as well as what your current minimum payment is for those. And then it can help you strategize. Well, if I had $20,000 in debt and across 5 different mediums, let's put it that way, which one should I pay off first? Should I pay the highest interest one? Should I pay the highest balance one? What if I got a tax refund and I had an extra $200? How should I apply that $200? And this tool, as I said, powerpay.org is really powerful because you can then strategize how you're going to do it, then start doing it, in terms of how you're going to pay down that debt, and then you can see the changes and the results from month to month. And so I just think that helps build confidence. The snowball method is, what people commonly term as if you have 5 debts and 200, 600, 1,000, and let's say 3,000 or whatever. First work on paying off the smallest one. And then whatever money you were using to pay off the smallest one, then apply that to the next biggest one. And then just keep going and trying to tackle your debts from small to largest and keep, pushing as much money that way as possible to reduce your debt. So there are also things like at Horizons where we can help you create a debt management plan. If someone has debts with multiple credit cards, we can work with the creditor through a third party to come up with reduced interest rates on those cards, and again create a plan to try to pay those off over the course of less than 60 months. So that's something we could talk about further if you ever want to come up and have a session. And as I said before, anything that you think is incorrect, dispute it. And so the Consumer Finance Protection Bureau has gotten a little scrutiny lately, a little publicity, good, bad, or whatever, but there's a lot of good information out on that website, cfpb.gov. You can find sample dispute letters as well as all sorts of other good financial information for the consumer. In terms of trying to prevent future derogatory reporting, we encourage you on a personal level, as well as then when you start getting into business, to track your spending. Always have a plan for where every dollar is going. Where every dollar is going. Keep considering all your needs versus wants. Plan ahead. Don't overextend yourself. And as I said, communicate with your creditors as early as possible. When I, with a little bit of my other hat on with SCORE and small businesses and so on, one of the top reasons why small businesses fail is either they don't have enough money or they don't understand their cash flow from month to month in terms of what their commitments are. So it's really important that on a personal level, first you understand your cash flow, your budget, your money coming in and going out, and then the same thing translates to the business that you're running or trying to start. You've got to be able to pay those bills. You've got to be able to buy more inventory or go to places so that you can create more product or whatever it is that your business is. So you don't want to run out of money. You also have to have enough money to potentially grow your business. Or I had a client who, I didn't get quite as much money from the bank as I wanted, so I'm going to start my business anyway, but I don't have any money to spend on marketing or a website. Well, that's fine. She was hoping she'd make some money, good money coming in, and then be able to cash flow the marketing efforts. Well, because people don't know who she is, what she's doing, she's trying to do a few things on Facebook, she still isn't getting the traffic coming in to her store. And it's important to start out with the right amount when you get your business going and to understand how you need to have the cash. So, as I said, this is supposed to be your personal house. Get your personal house in order, and then you can leverage that in your personal success to hopefully then, get your own business house in order and that sort of thing.